Hello everyone, Paul here from the Pin Academy. So in today's video, I'm going to be speaking about something that you need to master or you need to avoid so that you can speed up your process to becoming consistent. So I've been speaking about a few things according to my experience that you need to avoid or you need to prevent from your trading so that the process can be a little bit faster. And today I'm bringing another one. I'll be bringing them slowly by slowly. So just stick up until the end as I'm going to show you using one of the examples that we did. So on my screen is AUD/USD. I spoke about AUD/USD in one of the breakdowns or the previous videos that we did. And I'm going to be using it as an example again because it's on my watch list for this trading week. So I'm just going to be clearing everything here so that we can do it afresh. So before even I speak about what I want to speak about, the last time we spoke about this AUD/USD, the market was still up here and wanted the market to come back down all the way up to here. Now, what do I want to speak about? Whenever we as traders were making or we're doing analysis, for example, I just use turning points personally. I use turning points, which what I term as a structure of the market. And structure of the market, after market was turning points, structure of the market is made up of these things, shapes and patterns, according to how I understand it, right? I don't know. Someone may define it differently, but that's how simple I understand the market. And I want to keep it as simple as that. So, for example, as traders, when we're trying to analyze the market, we're just going to mark turning points here. For example, this is what I marked in that video which I spoke about. So after marking this turning point like this, I just allow me to use a replay tool here like this. All right. So let me just, it's a little bit slow. Okay, it has come. So when I mark this point like this is my target at this point. So meaning that what is important for me to be able to take this trade is this area here. This is my area of interest at this particular point, and this is my target. Now, when I reach here, this will be my target, and whatever structure that is here that I want to trade, whether it is an M head and shoulder, or even I just want to trade this turning point, it will be my target. Are you getting it? For this particular example, like what we are seeing right now on the screen, right? What we're seeing right now is this is my area of interest, right? And this is my target, meaning that if I want to take a trade, I will go to my entry time frame and see what price action is in this area here so that I'm able to take the trade from here up to this area here. That's what we did last time. And I gave you guys the example. I told you guys was the market closed below this area here, wait for a pullback and you then take your trade. That's exactly what I spoke about, right? Now, what I want you guys to stop doing or to avoid so that your trading can really move faster than it is. If you've already noticed it, then kudos. Now, when we mark our levels like this, they can be using an area or using line charts. Remember, I told you guys there are two ways of marking support and resistance. You can use a slab just like this, or you can use a line. Now, I said when you're going to use a line, according to my experience, this line, if you want to use a horizontal line, right? This is horizontal lines. You need to go to line chart unless you experience. For example, personally, I can just draw it from a candle just like this, the candle close. Or if you're not experienced, you can go to the line chart and you mark it like this. Are we together? Now, what's the difference between this? Now, this slab here, you're marking an area, right? You're marking an area where a price action that you're looking for could happen. While someone who's using this line here is marking to determine where exactly price closed. And these two things help us a lot, right? Now, what are some of the things that understanding these two things will save you from? It will save you from false breakouts. It will save you from making half-baked decisions, right? Let me just give you an example. Let's say I mark, let me just go back to the candlesticks. Let's say I mark this level like this, and then I go to my entry time frame. Then I say that, let me just delete this to make it a little bit clear. Then I say that once price just touches this area here, I am going to do what? I'm going to take a trade. You're seeing the moment it touched, it first even went down and grabbed liquidity, right? So most people just traded when the market tapped here. Of course, the stop loss is going below this area. They were taken out of the market. So you need to understand, what am I trying to drive at? You need to understand the importance of what we call closure of a candle if you're using the candlestick chart. I don't know which other charts you're using, but this is the most common chart that almost all people interact with use. So you need to understand the closure of a candle. It doesn't matter whether in 1 minute or 2 minutes, 5 minutes, 15, 30, 1 week, 1 month. you need to understand the closure of that candle. For example, this is H4. Someone who was here maybe saw this candle when it was still red and would have made a decision saying that the market has broken out. So the person didn't wait for the candlestick closure. Are you getting it? Right? So the person who waits for the 4 hour to close could have seen actually this has become, this is called a pin bar. It could have been, the person could have made a decision already to say that I'm selling this because the candle is still red. But the one who waited saw exactly that the price faked out. At first it was red, a long red candle, then it rejected and pushed up. Are we together? That's the importance of understanding this. As a trader, you need to be patient and see what price is communicating to you. Price communicates to traders, but we tend to ignore it. Are we together? So you need to understand that closure of price is so important. So how do I determine that? I determine that by just marking, for example, if this is my area of interest, I've mentioned to you 2 ways. Let me just clear these drawings. Personally, I can use a candle to just mark. So if price comes and closes above this area here, right? Whether it touches it and goes slightly below, but closes above it, I know that the market is still bullish, right? There's still a bullish sign, right? It means that this area here is still a key area. Are you getting it? Or even if I use my slab, I know that now when you're using a slab, the market or price can close or rest in this area as long as then close below the area. What we don't want is the price to close below. If it closes below the area, there's a possibility we're looking for an imbalance here, or we're looking to come and test this base again before we continue. Or if we can aggressively break it, it means that we are continuing down. So you need to understand that as a trader. Closure of a candle is very, very important. For example, last week closed when we are above this area. It means that this is still a very valid area of interest for us to continue with a continuation upwards. We together? This is the first example. I'll give you another example here with, let me just use EURUSD. They are one of the most traded, actually it's the most traded currency pair. So I'm just going to choose EURUSD there. Let me just remove all the drawings. So another example is EURUSD. Let me just go to another time frame like daily. For example, you see here, let me just increase the candlestick chart. Here, you can see here, the market had this high here where the price reached, and then the price was pushed down aggressively. Again, the market came and reacted to this same level here. We broke above. Now, I want you guys to observe something here. The market closed above it. Then it came back, tapped into the area and closed still above. It means here, buyers are in control. Are you getting it? Now, again here, observe this. The market closed below. Even the second day, it closed below. It means that there's a possibility that now we shall come to retest this area here because we broke it. Are you getting it? So there is no reason for me to start looking for buys when I'm still below this strong level here. Are you getting it? So closure of a candlestick is very, very important. The time frame doesn't matter, right? If you find that using a slab is confusing for you, you can do what? You can use to determine the closure. You can go to line chart, tap on line chart, then you mark this closure like this, the turning points. Just look for where the market is bending. For example, here. Then when you go back to candlestick, it will be very clear. So as long as the price does not close above this line here, you're getting it? But if you're using an area, if you're using a slab, the market can rest within this. Some people, why I'm showing you both is that some people don't prefer to use these areas. Yeah, some people prefer just to use one line, right? So some people also prefer areas. Now, me, I love areas because sometimes the market wants to breathe. It wants to trap people by creating structures. There are hidden structures within an area. They may not just use a single line, right? But it's up to you, the choice that you want to make. So you should understand the importance of the closure of a candle. When you understand this, the decision you'll be making is very key. Now, what are you going to be doing to practice or to do that? Make sure that once you're in the daily time frame, you have to wait for the candle. And this is a key area. For example, let me just use where price is currently. For example, I have this turning point. I'm not analyzing. I'm just using what I'm seeing. For example, I have this key point here. From here, the market turned and went up. Again, when the market touched it, it closed above, right? Again, when the market came and turned it, it rejected and closed above. There is no reason for me to start thinking that I should assume that the market is going to sell. What if I sell? This is what I mean by do not sell at support. Here, when you sell towards this level, it means that you're selling towards a support or a demand area. So how are you going to practice? You need to use the time frame. For example, if this is the daily time frame, wait for the day to close. If you're in H4, let me just go to H4 briefly. Count the hours, right? And understand that this H4 closes at this time. It works for everything. Whether you're trading synthetics or what, you know that, okay, this is H4 time frame. Each candle here is worth 4 hours. So like here, those people were trapped with this area here. You know that even if the market is showing that it has closed, but the H4 has not yet closed, you have to wait because this can reject and it even changes in the last 15 minutes of the H4. Are you getting it? Or the last 30 minutes, or even the last 1 hour of those 4 hours. Are you getting it? So please, closure of candle is very, very important. And you can use it both in your structure timeframes and in your entry timeframes, even the refining timeframes like minute 15, minute 5. Just understand the concept that if I'm in H1, I have to wait for H1 to close before I make a decision. If I'm in H4, I have to wait for H4 to close before I make a decision. Are we together? So also, how does the market close? There are certain candles that even if the market closed with below or above a certain area, it is indicating there's a possibility of a fake out. We shall be speaking about all those in the upcoming series of what you need to avoid or what you need to understand to get to your level or to speed up your consistency level, right? So this is what I want to share with you guys today. Understand the importance of the closure of the candle. If you're in H1, let H1 first close. H4, let H4 first close. If you're doing analysis in daily, let daily first close before you make a decision, right? So this will solve a lot of problems like false breakouts and also making a clean decisions. Also understanding if a retest was really worth it or not worth it, if the area has been tested or not. It will solve a lot of problems, right? It works in all time frames. That is it for today. Have a great week ahead.